Hi, welcome to McBoss Capital channel. Um, my name is Michael Chu, and today we're going to talk about market pullback versus correction. All materials shown here are for informational purpose only and not as investment recommendations. As usual, we focus on sharpening our skills, what to buy, when to hold, and when to sell. Today we're going to talk more about selling. So before we touch on today's market, we really want to understand like what's our philosophy. Um, we will really focus on preserving capital. Um, don't catch a falling knife. There's that term people talk about. If market is going to correct, and you don't understand why, it's better not to get involved or be careful. Eventually, when market turn up again, you will make money, right? Follow the market trend, understand whether we are in a bull cycle or bear cycle. Um, I do believe we're still in a bull cycle, so market will always pull back and correct. And generally, pullback could be any range from around 5 to 10%. And technical correction usually means it's over 10%. It could be anywhere from 10 to 20% or more. Um, Watch for sector rotation when this happens. So if the market pulls back right now, you want to see if there's new sectors leading the market moving forward, and what are the sectors that are having weakness. Um, you might also want to understand, the difference between growth and growth stocks, value stocks. What do they mean by cyclical stocks and defensive stocks? I'm not going to dive into detail here, but in general, that has to do with the economic cycle. So generally, at the beginning, like say, after the pandemic recovery, as is supposedly happening right now, earlier in the year, we realized value and cyclical stocks are more in favor. Now that uh, at least the U.S. economy are pretty much opening since March to now, there's a lot of talk that we are in the mid cycle of the expansion. So growth may come back in favor. So growth stocks, and we are seeing that right now. So tech stocks and even some healthcare stocks. Now, defensive stocks generally are referring to the healthcare stocks. And there's two areas to the healthcare, like there's the biotech, which are um, pharmaceuticals who develop drugs and stuff like that. And then there's the more on the service side where they provide service in terms of health services. So defensive stocks generally are more bullish, in the later cycle because so the risk kind of move from high to low as time goes on. So, I'm not 100% sure where we are today, but there's a lot of talk that we are moving back into a growth cycle, at least um, for the short term. And, no one has ever experienced a pandemic recovery, right, for a long time. So no one really knows what's going to happen and how fast the market will react. But it seems like we are um, moving towards, we are having a pullback right now. Not sure it will become a correction. Um, and also, we are noticing growth stocks are more in favor right now. Before we look at specific stocks and groups, we just want to touch on the stock market direction. So, last week, we did make all-time highs on Thursday and Friday around right here. So the S&P 500 was actually leading the market. It made new high, and because the previous highs was at 42.38, but I think it actually passed that point. But then when we start this week, Monday was, we made another high here, another closing high. But Tuesday, Wednesday, Thursday, Friday, it dropped 4 days in a row. And you see how it break through the 10-day, the 21-day, and then, and Friday, it was probably the worst day of the week, which is break through the 50 days. This is a critical sign right now, and I'll show you in the chart in a second where the long-term trend line is. So we really need to see support right away this coming week. So we are, this is the week of June 18th, so starting June 21st, we really need to see a bounce off here. Otherwise, we may see more. It may turn into a correction. Right now, we consider this a pullback, but we may see, more correction, like maybe possible 5% or more correction, right? From this level right now. Now NASDAQ, um, you know, it actually the pullback is actually happening, um, not only with S&P but Dow Jones and the Russell 2000. Um, with NASDAQ, just to show you what it looks like a week before, we are hitting new highs, recent highs. Uh, you know, we're still trying to pass this 14,200 level, which I don't believe it did. It came very close to it. On Monday, it tries to, but it didn't. And then Tuesday and Wednesday, it pulls back. Thursday, we saw a big bounce off the 10-day. Now that is at least a good sign because it didn't follow S&P and continue to drop, right? So at least on hindsight right now, it seems like Nasdaq is showing a stronger um, stand against this pullback. And then on Friday, it did pull back again to this 10 days. So it's testing it now for the second time in just 3 days, right? Now, it does, like I said, the actions are actually, overall, this action is much better than the S&P. So, um, and the other thing that is important here is we are finding support near this, this line right here is actually the 14,000 level. So notice how last week, even though we break through it on Wednesday, it actually closed above 14,000. So that has become a support level. So for NASDAQ is actually doing pretty good in regards to that. So something to watch for in coming days, especially, if S&P get hit again, will NASDAQ get hit and fell below this? Because right now NASDAQ is the only one still standing up. Um, this last week was very brutal for many sectors and groups that we are watching, as well as just in general. Um, you know, I'm gonna jump to the chart in right away. Biotech, Moderna, they are below short-term trend line. Volume, you know, volume up, like on the day where it's up, the volume is actually much lower, right? So let me just jump to the chart right now. So these are, considered bad signals right now. So it could be a sell signal. So we saw like two distribution days right here, Monday and Wednesday. Um, and probably the biggest thing as well is how it is now below the trend line. The green line right here is the 10-day moving average. So if we draw the projection, we expect it to continue to move down until it breaks above that trend line. Look at Moderna. We see similar issues here. Monday, Tuesday, we saw distribution there. And, Wednesday, Thursday, Friday, you can see it just couldn't climb back above that short-term moving average. So those are very negative signal right now because this could start a potential bigger drawdown. Again, it is following the market in general, so at least S&P. So watch for that. The next one is retail leisure products. Now, the only one that we have followed here, other than pool, everything else have kind of drift lower, breaking below trend lines as well. So, so you can know this pool here is actually holding up pretty good. And even on the days it's down, the volume came in much, like it wasn't actually didn't make a new low. That's what's happening here. It didn't make a new low. So that's a really good sign. And even some of the volume is slightly higher than the previous day. So that's a good sign for pool. But overall, the group is suffering, right? Here's the industry group chart. And you can see how it's just drifting lower now. It is at 50 days. So there's a chance it could bounce off here, right? But we want to look at this trend line, this 10-day, we project it. And now, you don't want to get bullish, at least for now, until it can cross back above that trend line. Um, you know, I just show you one example, like, Dixon Sporting Good is again near 50-day. Hayward, this one is above the trend line. Well, it's hard to see, but it's kind of slightly below the trend line of the 10-day moving average. But just in overall, the whole group has kind of starting to fall apart. So, um, you know, could be a sell signal as well. Commercial service staffing. This one also suffered a big setback last week. So we look at the group here. You can see, 2 days, Thursday and Friday, it just dropped really hard, and it broke all the trend lines, the short-term moving averages, and now it's below 50-day. So these are not very good sign. We go back to manpower, for example, you see it follows the same pattern. Now this one's even worse, right, on the chart, because it is much below the 50-day now. Um, the next one is oil and gas. Um, Oil and gas obviously recently did really well. But even last week it got hammered. So this is EOG, we got Thursday and Friday down. Now it's sitting at the 50-day. Um, we look at the group chart here, and we can see the whole group uh, are pretty much behaving the same, right? It went down to 50-day, it bounced a little bit. So now it's stuck between the 10-day and 20, sorry, this is the 21-day. So 10 and 21-day. So it's stuck between them. Now, this could be a buying opportunity because if this group were to maintain leadership moving forward, and if you do think oil price will keep going higher, most likely right now I think 71 or 72, something like that. If it does go higher, then there's obviously, potential to move back up, right, in that along this same projection, uptrend projection. But it's hard to say. Right now it is below the 10-day moving average, so watch for that to cross back above that, then it could become a buy signal again. Um, Let me go to the next group. So metal mining ores also suffer. So there's a lot of sectors that got hit last week, which is very scary. Because is this again the big question is this beginning of a correction, um, or are we going to see a bounce back really soon? And if we do see a bounce back, we need to see a strong bounce back right away. There should be no hesitance, whether it should, bounce back, because at this level, if institutions think that this is a good level to buy, they will come in this coming week. If they don't, then that means they're gonna let it slide much lower to lower prices. So watch out for that. So you can see Witten is down Thursday, Friday. It's dropped to its 200-day, which is the black line. If we look at the group, it's where now. So as you see on the group, the black line is 200. It has already broken that. So that's really bad sign, right? And this slope looks even worse because of, if we were to draw the slope right here, it looks like this, right? So now, as obviously it's going to stick closer to this trend line. Now again, if it does cross it, that's usually potential buy signal. But right now it's below all moving averages, which is a really bad sign. Now, with all this being said, the market did suffer, like I said, a big setback this week. There is some small sign of hope, which is um, mostly tech related, and we recognize from the NASDAQ chart as well, right? It didn't go down 4 days in a row like the S&P. It did rebound on Thursday, and Friday is just dropped a little bit, trying to hold on to its gains from Thursday. So some of the stocks that are for example, the security group, we have followed them for quite a while now. So if we look at CrowdStrike, you can see the uptrend is still intact, right? Really strong. So, we saw some pullback, a slight pullback 1 2 days here, another day here, pullback here, like really tiny pullback, which gives you opportunity to get in on those small pullbacks. And as well, if you look at the group, we are seeing same pattern here. So, for example, Fortinet, you know, it did drop on Friday, but you know, again, the trend line is really good. It's just moving up nicely. Um, let's look at Zscaler, same thing, right? So notice most of these stocks are in the base and building the right side of the base. So, you know, if we look at mine, it also has the potential. So here's the cup and handle base here. It's already broken above the cup with handle. Now it's just moving slightly, and you can see it's sticking pretty close to the 10-day. Uh, and 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 on Friday, look at the volume, right? And Friday was a high volume day in the market because of the quadruple reaching day, so there was lots of volume in the market. And look at how much it dropped, like very tiny, right, on the chart, and it's holding strong near even the previous day's price. So this is a very bullish sign for this stock. Um, we look at Adobe just report its earnings result. It was really good. Market likes it. Again, you can see it jump here. Potentially another good stock. All these are tech stocks, obviously. Again, here's another pullbacks recently, but then it jumps on Thursday, Friday. So the trend has started for these stocks, and you know you can ride the trend and follow them. Uh, MongoDB, which is a software database, and you can see this trend, this nice uptrend here, and obviously, you know, there's some minor pullbacks here, which is very orderly pullback. Um, and the last one we have on here is uh, wireless systems. And again, on Friday, you see how high that volume is, right? And we see that across the board on many stocks on Friday, is where we saw lots of volume. Now, obviously, it looks like nothing happened here, but you know, if we look at other stuff like Goldman Sachs, you can see you know all the banks got hit hard this week, um, and it's you know Citigroup, for example, is like you know a very sharp downturn right now. So be careful. This is a market that you know can deteriorate much further. So this week will you know may continue on that. So right now it seems like there is some small rotation into tech stocks that could help you know at least save part of the portfolio. So thank you for watching this video. If you like it, give us thumbs up and subscribe to our YouTube channel. Thank you.